Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening. I still got the wrong thing up there. I didn't do a live stream yesterday. Oh, I wasn't on camera. That's what it was. I wasn't on camera. I was not on camera. Let me get the right information up, the right background up there. Y'all give me a second. Virtual backgrounds, video, virtual backgrounds. Big Spider, where you at, Aranya Grande? There we go. Nah, we back. We Gucci. All right. All right. Good evening, everybody. How you doing? If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spider, if you don't hablo Espanol. And you're in tune to another episode of the Intraday Price Action Recap. And as always, this episode of the Intraday Price Action Recap being brought to you by the Smart Money Manuscript. First link in the description below for $69.99. You can partake in the most comprehensive, complete, one-stop shop, nice bite-sized chunks program to ever be created. Will give you everything you need to be a well-informed investor, trader, whatever you decide to be. And it comes, as you saw when we signed in, I still had the background up there. It gives you the opportunity to take advantage of the Smart Money Mentorship. Yes, that's right. Every second Saturday at 12 p.m. Eastern Standard Time, I do a live Q&A session inside the Smart Money Manuscript. So you can ask your burning questions and be like, hey, Tim, can you explain what an inversion fair value gap is again? I didn't see that. and I don't quite understand it. Hey, Tim, can you tell me what a first presentation is? If y'all don't know, that's how light-skinned Deborah talk. Speaking of light-skinned Deborah, we got light-skinned Deborah in the Zoom today. We got Seawalk in the Zoom. All right. We got Kim over. Wait a minute. I got to switch it. Just in case Here to Learn and Share is here, I got to switch it to it. Yep, there it is. I knew it. I promise y'all, my YouTube thinks Here to Learn and Share is a spam bot. I always got to click a certain thing in order to see her comments. Right. I'm starting to believe that she's a spam bot now. We got Here to Learn and Share over there. Says that Here to Learn and Share is holding down the number 3 top fan slot. We got Kim over there. It tells me that Kim is holding down the number 2 top fan slot. And then we got Rhonda Green over there. Shout out Rhonda. Hey, wait a minute. Is that Rhonda for real? Is that Rhonda for it? Looks something weird look on there. That picture don't look right. I know I ain't got my glasses on, but that don't look like Rhonda right there. That better not be no spam. Yeah, that ain't Rhonda. I don't know what that is.
Let us see.
Look like some flowers or something. You ain't gonna be able to see it. It's too low. You got eyeballs just like me.
I don't see it.
Know what I'm saying? You ain't gonna be able to see it because your eyeballs are just like mine.
Oh.
Too low. It's too low. Let me see here. If I move this over here. Let me see that. Put this on full screen. How I put it on full screen. Right there. See that little thing right there? You ain't gonna be able to see what I did. That little thing right there.
No, I can't see that.
I told you, I know you can't see it. I know you can't see it because it's repeating over and over. It's showing itself over and over. The little icon is usually around the face right there. But now it look like some flowers in a pot or something. Right. That's driving me crazy. Got to get off the screen. Get out of here. All right. Told you couldn't see it. You got eyeballs like mine. Shared in the background, like Deborah, I told you weren't gonna see it. He tried to tell you, but you wanted to see it anyway. We got honey over there. Wait a minute. Tariq. Is that Tariq? And we back again. What's going on, Tariq? That sounds familiar. That name sounds familiar. Tariq. We got Monica over there. What's going on, Monica? I see more numbers than I see names. All the names that I see, that's all the names are gonna say. Let's go ahead and I know you from Tremaine. Oh, okay then. What's happening, family? Say you know me from Tremaine's channel. What's happening, family? Let's go ahead and get into it, man. I ain't gonna hold y'all up today, man. We ain't gonna do no cooking today. We've been cooking lately. You know what I'm saying? It's kind of hot in the kitchen. I don't feel like cooking up nothing today, so we just gonna go through a regular price action recap, man. Regular price action recap. But before I get into it, who in the gang been doing the class participation? Who been doing? If you are in the gang and you have been doing the class participation, right? Drop a 1 in the chat or say me if you're on the Zoom. Speaking of on the Zoom, if you're in YouTube, there's a link pinned to the top of the chat where you can click on that Zoom link. Come on over there and join us in Zoom. Right? There's a waiting room, a 0.5. What in the 0.5 is going on here? There's a waiting room you got to go into because when I don't put the weight room up, we have some crank yankers coming in, you know what I'm saying, and just popping up doing some inappropriate stuff. So if you want to pull up inside Zoom, right, you ain't got to give me no email. You ain't got to join no community. You ain't got to do, you can click on the Zoom link, come over there to Zoom. You can unmute and ask your questions if you got a question, concern, or comment, because I am terrible at looking at the comments while I'm on live stream. All right. I had to make sure I start putting the timestamps on the comments so I can see how long ago the person said that by the time I look over there and see the chat, because when I'm looking at the charts, it's here and the comments are here. So it's in a total different direction. All right. All right. Did price do anything today that caught you off guard? If price did something today that caught you off guard, click on the Zoom, pull up, say, hey, Tim, can you help me to identify what I missed to see why that just caught me off guard? I was expecting price to do this and it did something totally different. Right? Let's walk through the price together and see if you can help me identify. Wait a minute. I ain't seen that in the chat. So you mean tell me I've been wasting my time? Right?
No, you have not been wasting your time.
Nah, Tim, I
No.
looked at
See, okay. My dog Sherwin said he looked at it, right? So y'all know how I get now. When I be doing something and don't nobody be paying no attention in the Discord, I cut it off. I get like what's the dude name that made that song? Cut it. Is the OT Genesis? Is that OT? Cut it. I cut it off. I cut it off. I got my work to catch up on. Then I have time. Wait a minute. I don't like that at all. I got my work to catch up on.
I said I got more work to catch up on than I got time in a day.
Oh, okay. I misread that because
I don't know what I typed.
I know just what you typed. I misread it because I saw I got my work to catch up. Then I have time. I was thinking you was bringing blood samples home from the hospital and was like trying to.
No, I'm trying to work, be grandma, be wife, be this.
Hey, hold on. Oh, you ain't gonna be blaming my little. You ain't gonna be blaming my little homie for that now. You ain't gonna blame my little homie. Ain't got nothing to do with your lack of time management. Your lack of time management. Get the grandbaby feeling neglected.
No, I got to get it together.
Sherwin hungry. The grandbaby feeling neglected. The people at the hospital need more band-aids. Your lack of, you ain't gonna blame that.
I know, I got to get it together.
Hey, man. Hey, shout out AJ in the building. Shout out Michelle. Michelle, where you been? Michelle, click on the Zoom link and come over to the Zoom and talk to me. We got Steve up in here. Yeah, man. Let's get to it. Oh, I still ain't seen no who over there. They hiding in the background. Y'all hiding in the background. Y'all hurting my feelings. Y'all, hold on. I gotta my toenail broke. It's catching on my sock. Wait a minute, y'all. I don't know how I did that. I'm about to clip that when I get off live. Some kind of way my toenail broke and was catching on my sock. And it was driving me crazy. Don't you know when you had like a little toenail that be on one of your little toes, not the little toe, but the one next to the little toe, and it be catching your sock whenever it move and it be snagging. I had to get that out of there, man. Then I'm gonna have to clip that when I get off live, cause now I got like a little moon shape on my toenail. What was I saying? I can't remember what I was saying. All right. Overnight price action today was Monday, the 10th of November. We just started the second week of November, the second trading week of November, right? We stated that price had come down to an anticipatory reactionary point, right? If I highlight, for those who don't know, right? If you look here, well, you can't see the black line, but you can see a little bit of the black line there. This monthly low is in the way, but that black line there, that blue line, that red line, that blue line, and that black line right there, those are the quadrant levels for our 20-day look back. That was the range that we had mapped out for our 20-day look back. That was our highest high and our lowest low in the past 20 days. Michelle Tucker. What's up, Michelle? Talk to me. Talk to me, Michelle. Come and talk to me. I really want to hear from Michelle. I really want to hear you speak. Oh, come and talk to me. I'm not going to go any further until you say something to me. Yeah. Michelle, will you speak to me before we go on? Tell me what's on your mind now. Feel much better. Michelle, we what? Michelle. Somebody help Michelle unmute. Michelle trying to find the unmute button. Michelle got her glasses on and she looking over the top arm like this. And she trying to find it. Like, wait a minute, how unmute this thing? If I come in here and put this password in for me again so I can find this unmute. Hey, who was that texting me?
Can you hear me?
There you go. There you go. I heard you that time.
Okay. I didn't want anything. I was just saying hi. And you told me to join the Zoom. I'm just,
Yes. I said
finally
join the
got
Zoom.
a chance to catch a live.
I said join the Zoom and come say hi to me. Y'all
Okay,
see
hi.
Y'all see when she said, "Can you hear me?" That she hadn't found the mute button that time. That was she was like, "How you doing, Michelle? I ain't seen you in a month of Sundays. What you been up to?"
I know, working like everybody else.
Yep.
So I got a new position and such, and they've been working me a lot.
Okay, let me hold a couple dollars. You got a new position. New position mean more money. Let me hold a couple dollars, man. It's hard out here in these trading streets, man. I trade these ICT concepts and I just can't make no money, man. Let me hold something, man.
Nah, I need it all. I would, but I need it all.
Man, a couple of my friends furloughed with no pay. I can't trade. They say ICT stand for I can't trade. I trade ICT concepts. I ain't making no money. I need to borrow a couple dollars, man.
I think you're doing okay, Tim.
Oh man, don't tell nobody nothing, man. Don't tell nobody nothing about me. They pocket watching out here. All right. Good to hear from you, Michelle. Glad you can join us.
All right. Thanks.
Today,
bye.
This is our 20-day look back, right? What's the 20-day look back? You have IPTA. IPTA has times that it look back. We know time is king, right? So IPTA looks back 20, 40, and 60 days, right? What is it looking back them 20, 40, and 60 days for? It's looking back for liquidity and inefficiencies, right? It's looking for liquidity and inefficiencies in the past 20, 40, and 60 days. When you're trading on your intraday time frame, right, you want to pay attention to that 20-day look back, right? You want to pay attention to that 20-day look. That 20-day look back is going to give you your dealing range, that's going to afford you the most trading opportunities for intraday trading, right? Because that's a algorithmic dealing range that the algorithm understands, and it's going to hit levels very, very, very accurately. If you understand, if you're in a buy program or a sell program, while you're inside that 20-day range, right, then you can use those quadrants right, as anticipatory reactionary points. And Michael teaches, right, you're looking for the bulk of your trading opportunities in between that upper quadrant and that lower quadrant. That's where you're looking for the bulk of your trading opportunities. Okay, for your intraday trading inside a 20-day look back. All right. And then also with your 20-day look back, it also looks forward. Right. So from your highest high and your lowest low 20 days back, right? You use that to project forward, right? How is price going to use these quadrants, right, to engage the imbalances and the liquidity in that 20 days back and that 40 days back and that 60 days back, right? So when you get your 20 days back, right, you're projected forward 20 days forward, and you're looking for the price to take care of the imbalances and the liquidity within that 20-day forward look back, right? That's how you utilize that 20, 40, and 60-day look back. That's throwback ICT. We don't talk about the IPTA look back a lot on here because the IPTA look back, that's one of the things where you look at it, you know, once you get your range, right? You really don't have to worry about getting a new range until you break outside of that range. So we don't look at it every single day. Now, Michael just recently dropped some beautiful gems about using the quadrants of that look back, right? And to be honest, it's really nothing new. It's just one of the things where I can't speak for you all. I can speak for myself where now me, I fractalize everything, right? When Michael talks about something, and y'all know, y'all hear me saying all the time, put quadrants on fair value gaps, put quadrants on your dealing range for intraday, put quadrants on your blocks, put quadrants on your wicks, you hear me saying put quadrants on everything, and it never dawned on me to put my quadrants on my 20, 40, and 60-day look back. And I'm Mr. Tested on everything, right? So when Michael was talking about putting the quadrants on the 20-day look back, right? I was like, why didn't I ever think about that? Right? Because y'all always hear me talk about when we run these quadrants, we run the quadrant from the lowest low to the highest high, but we're not running the quadrants because of this price action right here, right? We're running those quadrants because now we can see in the future, after this high is made and this low is made, now we can see in the future price levels there, 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 right? We can see these areas where the algorithm is going to leave high probability PD arrays for us to buy and sell off of, right? For us to buy and sell off of. You don't believe me? Who don't believe me? Is there anybody? If you don't believe me, raise your hand. Put a hand in the chat like this right here. If you don't believe me when I say, hey, when we anchor this on an algorithmic dealing range, these quadrants here, there's going to be high probability PD arrays that form on these quadrants to give you an opportunity to buy and sell off of. Right? Will it be on every time frame? Possibly. Possibly not. Will it be during the time of day when you're watching the charts? Possibly. Possibly not. But will they form? Yes, they will. Yes, they will. Right? Trust me, they do. All right. And if we just look at the chart right here, right? If we look at the chart right here, this is an hourly chart, right? So now this is the highest high. This is the lowest low. We have had this 20-day look back on our chart for a while now. Let me see here. Let's go to the daily chart. Right. So we made this high right here on the 30th, right? And we adjusted up to that high there. Right. So we've had this 20-day look back from at least the 29th or the 30th, because I remember we popped it up one more day after we had already set it. So from at least October 29th or October 30th, we've had this 20-day look back on the screen. Okay. So what I want to do, I want to go in here and I'm going to take all of these days off. Right. I'm going to leave the 30th on there. Right. Go back to an hourly chart. So now this is an hourly chart right here. And this is what price looked like when we anchored this Fibonacci tool with these quadrants right there. All right. So now remember what I said. Whenever you're anchoring your fib on a algorithmic billing range, this can be a 20-day look back. This can be a day. This can be a week. This can be an hour. Anything that's time-based that the algorithm operates on, right? If you anchor your fibs to it, you now have a roadmap. You have a roadmap of prices where you can look for the algorithm to create high probability PD arrays that you can buy and sell off of. High probability PD arrays that you can buy and sell off of, right? And then looking at how price looked when we ran these quadrants, right? Now take a good look at all this blank space over here where no price action had formed when we anchored this Fibonacci tool and then put it into quadrants. And for anybody who doesn't understand what I mean by quadrants, when you anchor your fib tool, 0 and 1, that's your high and low, right? 0 is your low, 1 is your high, however you stretch your tool, right? 0.25%, 0.5%, 0.75%. Those are the three different levels that you put in there, because there's 0, 1/4, 50%, 3/4, and 100, right? So that gives you 4 quadrants. 1 lower quadrant, 2 just above the lower quadrant, 3, 4, right? So you got the lower quadrant 25%, equilibrium 50%, and upper quadrant 75%, right? That's where you get the quadrants from. That's how you set it up. Now, when we look at these quadrants, right, there's no price action in front of there. But if we look at these quadrants here, here, and here, right, even the low and high. But remember, Michael teaches this is where you're looking for the bulk of your trading opportunities. Okay. Now, when I go back and put the meat back on the bone, I'm going to close out the playback. Oh my goodness. Oh my God. Becky, look at her butt. Where did the algorithm respond? Where did the algorithm respond? It just came right here for some reason. Why did it come right there? Huh? Why did it come right there? Let's go over there and look and see, shall we? Oh my goodness. Did the algorithm create a bearish fair value gap right in line with that upper quadrant right there? Huh? Did the algorithm create, am I seeing that correctly? Is anybody else seeing this? Did the algorithm create a bearish fair value gap right there in line with that quadrant? Wait a minute. We ran this from the lowest low to the highest high for our 20-day look back. And then for some strange reason over here on this 12 a.m. candle, right? We got a hourly bearish fair value gap, right? A 12 a.m. candle when we came and took out some sell side liquidity, right? We took out some sell side liquidity, created a fair value gap in line with a quadrant, and then we traded back up into it. And then we dropped down and came all the way down to a quadrant, right? And then when we look at that quadrant, right? When we look at that quadrant there, for some odd reason, the algorithm created a, come here, where is it? For some odd reason, the algorithm created a bullish order block that's right in line with that equilibrium right there. And it bounced off that bullish order block, and then it came back up, right, to this, right? So we created it, right? Used it as a first touch to drop down. And then we trade. Now we went from that quadrant, right, back up to this quadrant, right? And what was resting at that quadrant there? That bearish fair value gap, right? And then we came and we traded down below that quadrant, right? And once we traded down below that quadrant, we traded up into our fair value gap, left the breakaway gap there, and then we dropped down to the lower quadrant. So we came here, got below the upper quadrant, used it as resistance, came down, touched the equilibrium, traded back up to the upper quadrant, didn't take out the high. Then we dropped down and traded below the equilibrium, traded back up into the fair value gap. Then we dropped down to the lower quadrant, right? And we had already said we had some PD arrays over here that we was watching, right, on the lower quadrant too. We had talked about all of that, right? All the stuff we had come down into, yada yada you, right? Talk about how here the algorithm created, right, a bullish fair value gap that intersected with that lower quadrant right there, right? And if we come here, because you know it always some people that you know don't believe. Do we have a space there? No space there. All right. Let's come back over there. All right. Look at that there. Look at that there. That is what you call an institutional order flow entry drill right there. I'm sorry. I'm sorry. All the buying pressure kicked in right here. As soon as we hit this, don't matter. Don't worry about the magical green box that I ordered off of Amazon, magical green rectangular tool. Soon as price got right here, right? Everybody was selling. Everybody was like sell, 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 right? Sell, sell, sell. Start saying sell from way back here. And as soon as it got right here, had nothing to do with that quadrant level, had nothing to do with that fair value gap. Everybody in the market was like, okay, let's start buying right now. And so the buying pressure pushed everything back up, right? And then once the buying pressure started pushing everything back up, then we came all the way back up to this area here. Has nothing to do with the new week opening gaps, has nothing to do with the quadrants inside here. None of that. Ain't got nothing to do with that, right? So you see how price came down, utilized the upper quadrant to push us to equilibrium, bounced off equilibrium, came back to the upper quadrant. So this is what we be looking for. This is what I talk about when I say, does price show you a willingness to do this? How do you identify if it's showing you a willingness, Tim? I don't know what willingness looks like. Okay, I'm glad you said that, right? If price is bearish, right? We're in a sell program here, right? Starting up here, we see that we was coming down. We identify, okay, we're in a sell program. If price is bearish, right? You have your 20-day look back or any dealing range that you've put quadrants on. If you're bearish, you want to see it get below the quadrant and then set up some type of PD array to show you it's okay to short at that quadrant, right? Get below the quadrant, use it as resistance, right? We come here, right? We didn't get below the quadrant, right? We used it as support, brought us back up to that quadrant there, right? Now that we use this as support, took us back up, right? We drop again and get below the quadrant and then drop all the way down to the lower quadrant. So you want to see it get below the quadrant and use it as resistance. Below the quadrant, use it as resistance. And we come here, we didn't get below the quadrant. Then we came back up to that quadrant there, right? We're at that lower quadrant. At the lower quadrant and that upper quadrant, what does Michael teaches? You can get a deeper retracement, right? So when we come down here and completed this market maker sell model right here, right? Price rallied back up off of that lower quadrant and is giving us a deeper retracement. I'll admit this retracement is deeper than I would like to see if this sell program is to stay intact, right? When is this sell program invalidated? When we trade back up here and make a new high. So we got internal liquidity here. We got internal liquidity there, right? We got a bunch of internal liquidity that we can trade up into, right? But if it's exceedingly bearish, I don't want to see it coming up here. If we start getting up here into this liquidity here, what do I want to see? Just like this short-term buy program, what did price do? The opposite. It came up above the quadrant, used it as support, right? So now if it come back up here, take out this liquidity, getting back above this quadrant, I want to see it using this as support, right? I want to see it use it as support to push us up, okay? Right. So when you're in a sell program, you want to see it get to the dealing range quadrants and use them as resistance. When it's in a buy program, you want to see it get to the dealing range quadrants and use them as support. That's how you identify, is price showing me a willingness to what looks like NQ doing the Curve big dog. I mean spider. Chewing bonds, you funny. All right. Yeah, man, that's what price did today, man. That's what price did today. And let's zoom in here and give an example of, right, knowing when to hold them, knowing when to fold them. Going to go to a 15-minute chart here. Okay. I shared something inside the Air for Class participation, right? If you see here, right there, I shared this inside class participation, right? If you look at, click the wrong thing. Look here, right? It says, the focus of the study is what fair value gap did price react to and where was the fair value gap created? Meaning, was there algorithmic confluence? Take note of every detail of when time met price. Go. If we look here, I got some little eyebally ball balls, right? And the eyebally ball balls right here. Somebody tell me what the eyebally ball balls are looking at right here. Somebody unmute and tell me what these eyeballs are looking at right here.
That's the high probability fair value gap.
Yeah, don't give me all the fancy terms. It's a fair value gap. All right, it's fair value gap, right? Trying to get extra credit. It's a high probability fair value gap. It's a bullish fair value gap right there. Okay, where is that bullish fair value gap created? Where's it created? Deborah.
My bad.
Deborah, where is it created, Deborah?
I am trying to figure out. Okay. It is created in the upper, it is created in a discount of the premium quadrant. How about it?
Oh my God. Stop trying to be fancy. What does that dotted line right there represent? Right there. What's this dotted line represent? That's what?
Is that the daily? No, that's a purple box. So that's the, oh, new
Can you
week
see?
opening gap. Yeah.
Okay, new week opening gap. All right. So
Yes,
what is
sir.
that? What's that line right there? That dotted blue line. What is that?
It's gonna be the, go back over there again.
You ain't got to go over there. This the
Oh,
box
it's the
right here.
juicy middle part. I know that.
No, this is the box. That's the top of the box. That's the bottom of the box.
Oh,
What's
okay.
this dotted line right here?
That's the midpoint of the
Okay,
upper
so what? So
portion
so
of the
what this
quadrant.
red line is then? If this the
That's
midpoint, what's this red line right here?
that's the true consequent encroachment right
Okay,
there.
so what is this right here?
That's my halfway point at
Oh
the
my
top
God.
portion.
Oh my God. Phone a friend. Yolanda, what is this? What is this blue dotted line right here? What's that blue dotted line right there?
0.75.
And what's 0.75? Let's walk it from the bottom. What's
Yes,
the bottom right here? The bottom is what?
0.
But what is zero? Zero. This is what? If this the top, this is the bottom. What is the
Right.
bottom? What's the bottom?
I said 0.
What is zero though? Not zero. What is zero? What does zero represents?
See, you see what I'm doing?
Yolanda gonna stay on mute. Yolanda ain't gonna help
Come
you.
Yolanda.
If this is the top and this is the bottom,
Hey,
the top is what?
100%.
Get off the
0,
percentages.
25.
Get off the
off.
percentages. If the
Okay.
bottom is what?
Discount?
If you're standing on the ground,
Okay. Oh, support.
no, not support. If you're standing on the ground, right?
Mm-hmm.
Can you go any lower? If you're just standing flat on the ground, can you go any lower?
No, that's the lowest I'm gonna go. Yeah.
So what is zero?
The lowest point.
The low.
The low.
What's the top?
The high.
So what is this dotted line right here?
I'm scared to say.
What does these lines represent?
Quadrants.
Okay, so if this is the low, what's this right here? What's this dotted line?
You told me not to use 25%.
I know that. If this is the low, what's this dotted line right here?
Next to the low.
Oh my God. What do these lines represent again?
Quadrants.
The quadrants.
Yes.
Okay. So what quadrant is this right here?
That's the third quadrant.
Get off my line. Marco, help your sister out.
Somebody
Marco.
help me.
Help your sister out, Marco.
Please help me.
Well, I just got here, but what was the question?
Okay. So these right here, these lines represent the quadrants, right?
Correct.
If this is the low and this is the high, what is this blue dotted line right here? What quadrant is that?
That's a high quadrant.
This man said the high quadrant.
Well, tell us what you want us to say, and we'll remember it, and then we can give it back to you.
Kim already remember. Kim been typing it in the chat all
Kim,
day.
what? Let me go to YouTube.
The upper quadrant. When
Oh.
have y'all ever heard me say the high quadrant? The lower quadrant, consequent encroachment, the upper quadrant, and the high. Don't I
bet
say
y'all
that?
won't forget it.
Don't I say that all
After
the time?
this,
Don't y'all hear me say the lower quadrant, the upper quadrant, consequent encroachment? You're looking for trading opportunities between the upper quadrant and the lower quadrant, right? Remember what I said? I said that in the beginning. We'll talk about the what's the name now, right? Deborah, I'm coming back to you.
oh my God.
Now, Seawalk said we had a fair value gap right here. You kind of said the fair value gap was made at the quadrant, the upper quadrant. See how the fair value gap is intersecting with that quadrant right there? What did we say the algorithm is going to do at quadrants? It does what? It creates what?
We know price is gonna interact there.
It's gonna it's gonna create high probability PD raise. It's gonna create high probability PD raise at these quadrants. Yes, you're right, Deborah. Okay. Now, as price expands away here, what imbalance is intersecting with that quadrant line? When price takes off here, what imbalance is that?
That's a fair value gap, right?
Yes, but which fair value? That's fair value gap
Oh.
too. Why ain't talk about that one? What's important about that fair value gap right there? Which fair value gap is that?
What time was it created?
Oh my God. Just looking at price right here, just looking at price expanded up here. What fair value gap is that right there? Don't care about time. I ain't even looking at time right now. We're just looking at the fact that price took off, right? What fair value gap is that? Right? And I give you a clue. Right? The significance of this fair value gap comes from because it's this fair value gap before price did this and got a change in the state of delivery.
The second.
The first fair value gap.
The first fair value gap that was created in this expansion leg right here. That's the first imbalance created when price took off, right? And then came back down here. It went up here, handled some business. Whatever business got to handle, it's on the algorithm. In this case, we came and we ran out some buy-side liquidity. We traded up near a quadrant level, right? And then we came back and got a change in the state of delivery. So since that right there is our first fair value gap, first bullish fair value gap, it intersects with a quadrant line inside of an algorithmic dealing range, which is our new week opening gap. Once we get this, once we trade down here on this candle and create that inversion fair value gap, that now makes that a what? An ICT inversion fair value gap. I like to call them a high probability inversion fair value gap. Because of all of these reasons, combined with the fact that we're in a sell program, right? We now have a inversion fair value gap at a very specific place where the algorithm has left it to sell off of. And when we come over here at this point in time right here, right? When time meets price, right? Let's go over here to our charts now. Okay. This right here is that fair value gap that we're talking about. Wrong way. This right here is that fair value gap that we're speaking of right there. Okay. Come here, make sure I got it marked correctly. Is there a space in there? No space there. All right. Space up there. All right. So when we come over here, right? When we come over here, now, these are 15-minute candles. Let me go ahead and chop this off here. All right, we're going to chop this off here so I ain't got to drop down so far. And we're going to go down to a 1-minute chart. Okay. But Tim, why are we going to a 1-minute chart? So that we can get all the deets, all of the dirty deets. Okay. So we're going to come over here and we're going to mark out key areas and price right here. Because we always want to wait, the time meets price. Dance. Let Fraggles play. Down the Fraggle Rock. 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 Okay. Now that I got my area mapped out, I can go ahead and put the meat back on the bone because I didn't want to have to scroll way over looking for my place. All right. Now, all I want to do is zoom. Right. So when we look here, right, this is that. Remember that just for clarity, this is that inversion fair value gap over there. The one that we said was created that intersected with that quadrant level, right? Everybody tracking, everybody still on board, everybody still know what we talking about. Anybody lost? If you lost,
I got a question.
Okay.
Did we create that on the 15-minute, 5-minute, or what?
15-minute.
15. Okay, thank you.
Yeah, 15-minute inversion fair value gap. I think it was we was looking at yes, 15-minute there. All right, let me make sure my PD array say the right thing, because when I went and clicked on it, I can see it say 1 minute. All right, so 15-minute. Make sure it say the right thing. Don't want to give out no bad information. All right. Matter of fact, let's check it there. See if there's any confluence over there that we can look at. Go down to the 1 minute. All right. Spaghetti-o. There is a 1 minute there too. So we got a 1 minute, right? Fair value gap right there, right? That's the first one right there. We also got a 1 minute that's intersecting with that right there, right? What you see here, when we came down, we traded down into that first one, our breakaway gap, and we traded away. Right. And we're going to look at the 1 minute. The high of the 1 minute is just below consequent encroachment of the 15-minute. Right. So I'll just do it like this. Make it easier for people to not have to remember. Right. So we also got a 1 minute in there, just like that. Right.
So that's a 1 minute inside of 15-minute busy?
Yes. Right. So we got a 15-minute inversion fair value gap here. Then we got a 1 minute inversion fair value gap inside of that 15-minute right there. Right. I just jumped down there to check that out because Deborah asked which time frame it was on. And I had it marked for the 15-minute, but it said 1 minute. So I was like, let's go check the 1 minute and see what's going on over there in the 1 minute. Oh, look what I just saw on the 1 minute too. Right. I'm just down here looking, right? Wait a minute. Right. Y'all see this right here? What is that right there? Somebody tell me what that is right there. Do anybody see what that is right there? If y'all can't see it, let me show you. if I come here,
Is that the first SIBI that took out the first value fair value gap that took out the low?
there you go. Right? We got the first SIBI that went down, and we got to change the state of delivery. And where did we trade back down to? Remember, I said we came down into that first BISI right there, but we also came down into that inversion fair value gap. What makes it an ICT inversion fair value gap? It's the first imbalance that was created when the algorithm came and handled some business and then got a change in the state of delivery, and it came back to that inversion fair value gap. Right? Remember when Michael taught, if you have a breaker, if there's an inversion fair value gap inside that breaker leg, you anticipate in price to come back to that inversion fair value gap. Why is that? Because that's an ICT inversion fair value gap right there. What do we come back to? That inversion fair value gap. And then once we get back on the bottom side of that, after price goes and handle business, what is this now? What does that become now? Right? We came over here, we used the inversion fair value gap. So if it's an inversion fair value gap, when we get back down on the bottom of it, what is it now? Somebody tell me, what is that now?
Reclaim SIBI.
Reclaim fair value gap. Very good. We all over the place today, man. Y'all cooking with Crisco. Now let's put the meat back on the bone and go back over here inside our little fractal price we was looking at. Okay. Here we are here, right? So look at all that confluence up there. Can y'all see all that confluence up there? Right. So here we are. We come over here during this macro window right there. Right. So for the macro window, right, we drop down here. Right. We come down into this little area here. Don't do nothing terribly important. We do trade down below some sell side right there. Just kind of hang here, do. Right. Then we blast off, take out buy side. Right. And then we trade back down into this right here. For those who can't see what that is, that right there is the first BISI that was created during the 930 opening range. Right. Use it as support beautifully. Right. Then we trade up and we take out the high right there, and we kiss that inversion fair value gap right there. Right. We kiss the inversion fair value gap, pull back off it a little bit. We come up here, then we kiss the reclaim fair value gap right there. Right. Pull back off it a little bit. Then we come down. We create some other imbalances and stuff like that. Right. The first SIBI inside the 1030 opening range, come back down to that 930, right? Come back up to that first SIBI inside the opening range of 10, right? See how we're using it right there. We come down, created that first SIBI, right? Use that first BISI from 930 as support, right? Traded up to that SIBI, kissed it beautifully, went up to consequent encroachment of it right there. It's hard to see because it's a very small SIBI, right? Don't matter how small it is, went right to consequent encroachment, and all of the selling pressure said, hey, stop right here in between this very small imbalance right here, and let's start selling right now, right? Selling pressure jumped in right there at that point. Okay. Then we drop back down here, came down here. We're coming, traded all the way down to where? Right? Where do we go? This bullish order block right here. We got a huge bullish order block here, but the last down close candle, where's that? Intersecting with that consequent encroachment of that new week opening gap right there. Right? So we came here, we got above it, right? Dropped down during the macro, manipulated out some sell side, rallied back up during the macro, hit buy side, right? Dilly dallied around for a while, right? And then we come here and we drop down right here into that order block that's in line with that consequent encroachment, right? Rallied up. Once we rallied up, we got above. And while we rallied up, we created that first opposing fair value gap during the 10 to 1030 time frame, right? Created that, right? Not mentioning, don't want to fail to mention that 9:30, that first fair value gap from 9:30 to 10 o'clock. Look at the bodies. Look at the bodies, right? Wicks doing damage, bodies telling the story. All right. We rally up. And once we rally up, we come right here. Right. And what do we go to? We come up, take out buy side, and we come up into that 1 minute inversion fair value gap, the 15-minute inversion fair value gap, and the reclaimed fair value gap, all over there, the ones that interact with that upper quadrant right there, right? We hit them there at 1025 there, then we do the doing inside there, 10 going to 1030, this 1029 candle, we drop down into that first opposing fair value gap between the 10 and 1030, right? We rally back up, touch that, those two, all three fair value gaps we talked about one more time. What do we fail to do? We fail to take out that high, right? When we fail to take out that high and we trade down and take out that low right there, right? We now have an important high up there. He's smiling because he's important, right? If I squash it down a little bit, I can make it look a little bit better for you, right? Make him look a little bit better for you. I'm smiling because I'm important, right? Important high, right? There, right there. We drop down, right? Displacing the way, like we said, taking out that sell side. We get an immediate rebalance right there, right? Then we overlap. Then we set a bearish order block. Where is that bearish order block being set? Right there on that consequent encroachment of that new week opening gap, right? But when we set that bearish order block, what do? We trade it back up into that first presentation of that 930 range, right? We're now below it, right? So what are we doing? We're coming up using it as resistance. We used it as support here. Support turned resistance. This is true support and resistance. That's that first fair value gap formed after 930. Use that support, support turns resistance. Create a bearish order block that's touching, crossing that consequent encroachment, right? Trade back up into it there. Boom. Come down here, right? Going into the macro time. We drop down, right? Come back up after setting relative equal lows. Then price spools, right? During this macro time. Spools, right? Comes all the way down to the low of the new day opening gap from the 5th, right? Once it spools down, right? Once we come here, like this right here, we spooled all the way down here to the low of this right here. Once this right here closed right there, can somebody look over here and tell me what we created? All right. We trade down here when this candle at 1052 closed, right? We closed below the low of this BISI right here. Where's this BISI? This BISI is in line with that lower quadrant right there, right? We close below there. We trade up inside that BISI, inside that SIBI, then price drops down, boop, to end off the macro time right there, right? And while it's dropping down there, it dropped down into here when we traded into that SIBI and into that inversion fair value gap. Yes, that's inversion fair value gap. This is the first BISI that was created before we took off there, and we came down and closed and created an inversion fair value gap right there, right? Traded up into it, traded up into the SIBI, dropped down. What did we drop down to right here and started pausing? This right here is the first SIBI and the first opposed BISI that was created during that 8 to 8:30 time frame on the 10th, which is yesterday, right? whenever price is near these PD arrays, you want to remember them, right? So we got down here, hung around there for a minute, displaced away, right? Displaced away, came down below the low of the new week opening gap, came all the way down here, right above midnight high. You know, we took out sell side, right? Traded. Right, traded all the way down there and touched. Right, traded all the way down there and touched that inversion fair value gap right there. What inversion fair value gap is that? Right, when we paused here, displaced away, that's the first SIB that was created before we got that change in the state delivery right there, before we came down below midnight, whatever it did over there, rallied back up, right? We came into below midnight and rallied, right? Inversion fair value gap right there, right? Traded down into it right there, came, kissed it there. And then what did we rally back up to? Let's go and see. We rallied all the way back up to those first presentations from the 8 to 8:30 opening range from yesterday to the high of the SIBI, just below consequent encroachment of the BISI, right? And we notice there's a bearish order block sitting right there at consequent encroachment of the BISI of that first presentation and first opposing presentation from yesterday, 8 to 8:30 range right there, right? And then price comes down, do the dues there, right? Trades down below the midnight open, right? And once it trades down below the midnight open, right, what has it done, right? When we came into the day, right? When we came into the day, what did we say? We said price had been in a strong buy program, right, all night. Okay. And let's come over here and find 9:30. Right. This is why you always want to have your stacks on stacks on stacks on. I said I wasn't even gonna cook today. I said it. I said I'm not gonna be cooking today. I'm tired of cooking. All right. Right. Okay, 9:30. It's 9:30 right here. So this is our 9:30 open. Right there. Right. So that's our 9:30 open there. Let's fatten that up so we can see that. Okay. So when we came into today, right? When we coming into 9:30 doing our pre-market analysis, right? We said that we was in a strong buy program. All right. Price is in a strong buy program. I said, if, right, you want to buy, you want price to retrace a little bit and give you a reason to buy, right? Buying up here, right, at this time is not worth it, in my opinion. You can scalp and wait on price to capitulate, right? We pointed out some stuff that it can capitulate off on, called out a possibility of taking some trades based off of some PD arrays, and all of the possibilities we talked about played out, right? Not a call out service, not saying take the trades, but we just pointed out how you can participate if you trust that structure has been established and you're willing to buy in a premium up here, what signatures you want to look for. Now, right, because you're in a buy program, right? If you're in a buy program, somebody tell me, where do you want to buy, right? And at or below what? Okay. Somebody tell me, where do you want to buy and at or below what?
In a discount at or below equilibrium.
That equilibrium at or below, that's a
At or
discount.
below, that's a discount.
Okay, at a discount and
At
at
a discount and at or below what?
And
Opening.
opening. Oh,
very good. You want to buy in a discount, preferably at or below and open. All right. So price, we come here, right? And price starts out here on the day, right? It's going, it's going, it's going, it's going, it's going, it's going. It comes all the way up to here and it starts trading back down, right? So now if we come over here, get our trusty Fibonacci tool, right? If we can get it on our high. Right. If we can get it on our high and get it on our low, right? That's our low of the day. That's our high of the day, right? And then price, right? What do we have here? We have some sell side liquidity resting right here. Right? That's sell side liquidity resting right there. This right here is our London low, right? That's our London low, that's our London low right there. Our London low swept out that sell side there before rallying up, right? Did we take out our, this is just before midnight. No, we didn't take out that low right there, right? So that's our London low, right? We rally up off of that. Now, when we, matter of fact, we hit that there. This right here, that was just before midnight right there, but that's the London low. That's the one I'm concerned with. These are relative equal lows right there, but that's the London low. That's what I'm concerned with, but we do have relative equal lows there, time-based liquidity there. All right, time-based liquidity at relative equal lows. Okay, so when price comes back down, all right, what do we come back to? Right, so at 9:30 we were saying we're in a buy program, but you don't want to be trying to buy up here in the premium, right? Price goes up here, hits a specific PD array, comes down. Look at how it's using these specific PD arrays as resistance. Drop all the way down here, right? Create a low and rally back up. When we created that low right there during that macro time, what do? We created relative equal lows with our London low right there. Then we push back up, right, into very specific PD arrays from yesterday, algorithmic time-based PD arrays, and also trading back up into close to the 9 o'clock open. Didn't quite get it, but close to it, right? Then we drop down to a very particular spot. This line right here, right? This line right there is our midnight open. That line right there is our equilibrium. Anything below that line right there is a discount. That's fair value, right? This right here is midnight, right? Midnight is the first price that the algorithm saw as fair value on the day. That's the first price offered on the day. And it just so happens to coincide with our equilibrium or fair value of our range today. That's not an accident, right? So now the algorithm drops down into a discount below the daily open, below the session open, and sweeps out sell side liquidity, right? If you're bullish, what do you want to see first? You want to see the algorithm take some time-based liquidity. That's our London low that we swept. Sweep our London low, use midnight as support. Boom, blast off, get a bullish break in market structure right there. All right. And then, right, y'all be thinking I be making stuff up. Y'all think I be making stuff up. Right. I don't make up anything. If, right, let's look at price here. Uh-oh. Take this off. Get out of there, you. Right. Let's look at price here. Price comes down, trades up.
comes down, trades up, comes down, trades up, right? Once we did all of that right there, right? Price comes down to right here, right? Stops right there. Okay. And then it comes down again here, stops right there, right? 2 times. Bam, bam, bam. Now, watch this right here. Watch this right here. If I take this here, right? Get this 1 minute fair value gap here. I'm going to come right here. I'm just going to pick a random fair value gap, right? I'm just randomly picking the fair value gap. Ain't nothing important about it. It's just, it just so happened I got like a magic rectangular box there. Go pick that one there, right? Then we come over here, right? See this little consolidation area right there. Then we drop down there, right? Below that low there, and come back up here and drop back down there, right? Look at that little area right there. Here, grab this. Another drop down there. Highlight that right there. Just like that. All right. And then we come back over here. Oh my goodness. We drop down right there. Right. We drop down right there to that inversion fair value gap right there. But also, do y'all see this little bissy right there? Y'all remember what this is right there? That's a quadrant. That's the lower quadrant. That's the low of our new week opening gap, right? That's one of them quadrants. That bissy is intersecting that quadrant right there. And that bissy is inside that inversion fair value gap. That's the first one, right? That's the first one right here that was created when we dropped down and went and handled business before coming back up and taking it out, right? Because when we look over here, before going down there, no more SIBIs over here. That's the first SIBI that was created right there, right? And then you say, Tim, but you pointed out that first SIBI that was created from the overall drop going down. I know I did, right? And then when we pop back up right here, right? When we pop back up off of that inversion fair value gap, we traded up and we came back down and traded into that inversion fair value gap right there. Right. That inversion fair value gap right there. It done blowed my concentration. But as we see, right, we came back here to that inversion fair value gap. That's the first SIBI that was created right after we used these 8 o'clock first presentation and the first opposing as resistance, dropping down. That was the first SIBI there, right? Once we came down to this quadrant, that was the first SIBI there, right? Once we got back above the quadrant and back above that right there, we dropped down into that inversion fair value gap, traded up, dropped down into that first value gap, and using these as support again. There we used it as resistance. We used it as resistance, then resistance, turn support, right? The bodies are staying above it here once we wick down into that there. And then we went all the way back up, right? We went all the way back up, taking out the high and continuing up outside the high of the new day opening gap. So this right here was the buying opportunity in a discount below the daily open, right? That's where smart money got long at. And then you had 2 opportunities here to participate, right? Had 2 opportunities to participate in a very good position to go up. And then once it got back up into a premium, it was still given opportunities here, but it was based off the same thing we was talking about earlier today. If you trust buying in a premium, right, you want the algorithm to show you that price has established a range, structure that's going to support price, right? So we come up here, right, and we're consolidating here around there. We drop down, right, fail to reach the the first presentation from 9:30, right? And then we immediately rally back above the first presentation from first opposing presentation from 10 to 10:30, right? We come back up, we create a busy right there in line with the inversion fair value gap. We come back up, get back above it. So now it's an inversion fair value gap again. When we're bullish now, over here, we was bearish and we got below it, right? Used it as resistance. Got over here, we was bullish, right? Used it as support, right? The body's telling the story here during the macro time here. You see, we come down and sweep liquidity right here on this 202 candle. Yeah, hold on for a second. All right. So we used it as support there. This is that's the first presentation from the 10 to 10:30 time frame, right? Back above it. Okay, we used the first opposing as support here. Use the first as support there, right? And we get up here, and now we get back on top of these inversions and the reclaim, right? So we got the 15-minute inversion, 1 minute inversion, and the 1 minute reclaim here acting as resistance, right? We get back above them here, right? We come down, trade back down into that 10 o'clock right there during this macro time, right? This is a macro window here. If I map it out for you there, right? Come over here, map out the macro window there, right? During the macro window there, right? So during our macro time, what's our job on the macro? To seek liquidity and imbalance. So we come here, trade up, take out the buy side, right? Immediately reverse, take out the sell side, trade down into, right, our first busy, trade down into our inversion fair value gap. Then we rally back up right here, right? Taking out buy side, taking out sell side, then coming back up and taking out buy side. What signature is that? That's our wig snatcher, right? We trade back down here into the breaking structure, into these imbalances here, whatever it is. That's your retracement back down to participate in this wig snatcher. And then price goes up to the high of the inversion fair value gap. But this right here is what I was talking about, letting the algorithm show you that structure is supporting price to trust being able to participate inside the premium, right? So if you don't trust this as a buy off of this macro time, taking out that because you'd be like, oh, we might be getting a Judas swing to go bearish, right? If you don't trust that, all right, wait for it to go here and trade back above. Now you know that's a wig snatcher. So now you're looking for the retracement back in to participate. Same thing we did this morning. We was looking at it, say, hey, right, buying off of this fair value gap, buying off this order block. You put your stop here, right? You put your stop there for safe stop, this for mandatory. And then we had like 3 different examples, right? And all the examples played out like gangbusters, right? Same thing over here, right? Let the algorithm establish the range that you can, structure that you can trust, and then buy it and put your stop loss where your stop loss should go per the PD array you trading, and then trust the process. I said I wasn't gonna cook. The crank yanking done pissed me off, right? I'm sorry. I ain't gonna be no Zoom link. And I see Gigi say, how do we get the Zoom link in the future since it won't be shared on YouTube, right? Only place is gonna be in the gang. But I mean, you don't need the Zoom link to participate, right? You can still participate by just putting your question in the chat. I prefer vocal interaction, right? I prefer vocal interaction because that gets my attention quick, right? Like going back and trying to look at the chat and trying to figure out what you was talking about, it just takes too long, and my ADD don't let me like deal with that. But I'm sick of it. Y'all don't understand how mad I am right now. It's like I was about this close I was about to just end the live, but I was like, you know what? I ain't gonna let the crank yanker, you know what I'm saying? I ain't gonna let it. I need to go back and see how bad this was. Was it just a little small thing in the corner where you can see him?
Not on my screen, ugly self.
Oh yeah, on the Zoom it's gonna be big.
Oh.
On the Zoom is big, but it's like I can't see it on the, you know what I'm saying? I can't see the Zoom
Oh, okay.
when I'm sharing, like I can't see the Zoom one. All I can see is like the, because on Zoom, all y'all see is the big, like the big squares. So if it take over for me talking, it's gonna be just that full screen.
Yeah.
Oh, somebody said I might want to edit it out. Yeah, it's
Oh,
like,
for sure. So I'm sorry. So how this
yeah, I
is
see him up there. I see him up there in the cut. Yeah, I'm gonna take all that part out when it finalized. I'm sorry, go ahead.
so when you say the gang, what does that mean?
Oh my God, that's worse than the last one. Y'all, I'm so sorry, y'all. I ain't never sharing this link again. That's worse than the last one.
Oh my gosh.
Oh my God. Oh my God. So I'm sorry. Go ahead, Gigi. What you were saying?
So you said part of the gang. What does that mean?
Oh,
Part of the gang, the big
have
spider gang.
yeah, I have a Discord that
Oh, so it's the Discord.
yeah,
Okay.
they it's like it's different tiers in the Discord um where we do certain things, but like I was saying, just to be just to participate in these live streams like that right there, you don't have to be in the gang to participate in this. And like I say, you don't have to be in the Zoom in order to ask questions. I just prefer it in the Zoom
Yeah.
because I can talk to you and I can understand exactly what you're asking. It don't get lost in translation of typing it in the chat.
Okay. But I'm interested in doing the morning sessions with you all, so I'm not sure what tier that is.
We okay, that's the diamond tier, and
Okay.
we do like price action analysis on the days that I'm going to be sitting down trading. And sometimes I do it on days that I don't trade. Like if I trade at night, I'll still do a price action, and we do that every day. And then we tape read on Wednesdays.
Okay.
So Wednesday morning we tape read from 9 until like 10:15, and then Monday, Tuesday, Wednesday, Thursday, Friday we do pre-market analysis, and we try to start roughly around 9 o'clock, and then we just do the analysis up until I finish talking. Sometimes we might finish before the market opens. Sometimes we might finish at like 9:45, but we do like pre-market analysis, and that's inside the diamond tier. I think it's like the second. I think it's the second link in the description. It says like, I think it say join. What do it say?
Now I see it.
Join private Discord. Yeah.
All right. Thank you.
Man, I'm sorry y'all about these freaking idiots, man. I'm whenever this I'm not gonna take the video down. I got to wait till it process, and then I have to cut that part out. So I'm gonna make the video I'm gonna make the video unlisted. I'm gonna make it unlisted until it processes, and it I can cut it out. If you're in the gang and you want to go back and look at it, because it's going to take a while for it to do that, right? So if you're in the gang you want to look at it, I'll share a link inside the Discord, but I don't want that to be public because I don't want nobody seeing that. So if you want to go, if you know you want to go back and look at it before I get a chance to edit all that out, the link will be in the Discord in the main chat. And then once it edits and fixes itself, then I'll make it back public again. But that might take a day or two, because YouTube be mad slow when it comes to processing long videos like this. And we done been on here for a while. We done been on here for like an hour and 40 minutes now. God, I ain't never sharing that link again. I promise y'all. I'm pissed off right now. Do
Yeah, man, they hate because you spitting them gems, man.
man, what? Man,
Yeah, I
what?
believe it's somebody out there who's hating on,
Man,
Yeah.
what? I ain't never, because at first I thought it was from Twitter. Because the first time it happened, it was on Twitter, right? But man, it was worse. This, like, when I zoomed back, the clip that I saw, oh my God, it was much worse than the first time. I did see what we saw the first time, but man, oh my God, oh my God. Yes, violation. Hey, tomorrow is Tuesday. Um, Diamond members, we got pre-market analysis tomorrow. They were saying that I appreciate that. Yeah, and everybody, all the veterans, happy Veterans Day. I appreciate that, Kim, right? Being a veteran myself, but all the veterans, happy Veterans Day. Um, Tomorrow is Veterans Day. I will do a pre-market analysis. I'm not sure if I'll do any trading because the market is open, but I'm not sure how it's going to be acting because some people say it's a bank holiday. The market's still open. You know what I'm saying? So I don't know if it's going to be weird, right? Bonds closed. Yep, bonds closed. So that's why I say I don't know if I'm going to be trading tomorrow because the bonds are closed and it's a bank holiday. And so I don't know, but I will do a pre-market analysis for those that do want to spend some time in front of the charts. And depending on how price trades tomorrow, if it does something worth talking about, I'll do a price action recap at 6, right? Again, I apologize for the crank yanker. Y'all enjoy the rest of y'all evening. And until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't all blow Spanyo. Y'all be safe out here in these trading streets, man. Gone.